Good morning, traders. It is 8:03 a.m. Chicago time on Thursday, the 16th of March, 2023. Thanks for joining me today on episode number 2431. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hectic morning. We're still waiting on the ECB's rate decision, which normally would have come out already, but today it's coming out right now at 9:15. So in about 12 minutes, we'll see some volatility kick in. ECB has been baited to potentially raise by 50 basis points, maybe not, given the issues with SVB, Credit Suisse, and so on. The FOMC's next Wednesday. The overnight announcement came through that Credit Suisse is tapping into the Swiss National Bank's credit line for 50 billion Swiss francs to ease the liquidity crunch. Initial claims and Philly Fed, there's a slew of numbers that came out about a half hour ago. Just a long list. Building permits came in strong. Housing starts really strong. Housing starts month on month for February came in at 9.8%. The prior's negative 2%, almost a 12% swing higher in housing starts from the prior month. Export prices came in stronger, import prices lower, building permits much stronger, 13.8%. Looks like the housing boom is reignited somehow, even with these interest rates. Philly Fed missed by quite a wide margin, came in at negative 23.2 versus negative 15.6 expected. Initial claims came in pretty strong again, lower than the expected. 205,000 came in at 192,000. Strong jobs market still. Again, the ECB is supposed to raise its deposit rate, or is expected to raise its deposit rate by 50%. 50 basis points, 50% would be just incredible. ECB's interest rate decision expected at 9:15 Eastern. So that's where we stand. That's the play. The main pieces. The market sentiment right now is really sideways. The market has come off just a little bit, but since the numbers, but overall, not too much going on. My news feed is incredibly busy this morning, and you saw what happened with Crude here. So the S&P multi-distribution profile yet again. So the market's actively discovering price or seeking balance. 367,000 contracts in volume. Lower than the prior 2 days, but still quite elevated, much higher than what we would consider normal for the last 252 days. It's greater than one standard deviation, which is 320,000 in the overnight session. The inventory is almost completely balanced above and below the prior close, with 41.75 points of range, which is much lower than what we've seen in the last couple days. That's a lot, right? So there's a lot to process there. Let's take a look at where we are here. So overall, what we did yesterday is we had opened below the prior day's range, and the expectation is to test the 3,900. My primary expectation is a push to test 3,900 and then drop down towards the 3860-55 area again and potentially retest at 3820. The market saw it differently. Again, a lot of news on deck. There's just a lot being said throughout the day by various central bankers, politicians, and so on. So things are a little bit erratic. To add to that, this week is rollover week, and we are pretty much done with the S&P with the overall roll. We were at 92% yesterday. It should be done today. We still have the effects of expiration, which lasts through tomorrow. And 1 second. CME site's forcing me to log in again for some reason. There we go. It booted me out. It's forcing me to log in again, so I'm having to do that. So here's the chart I want to show you on that. So everybody has access to this. This is the pace of the roll. You can see the roll is in line with the average. The average is 78.08% of the open interest rolling. The current is 78.01, so right in line. And by expiration, 78.75 will have rolled. So what we do is we look at the current roll, which is 78.02, divide it by 78.75, and we get what percent of the roll is done. It's pretty much 100% done at this point. So we could start leaning a little bit on the volume delta and reading volume in the order flow the way we normally do at this point. That's important, but we still have the effects of delta hedging and delivery tomorrow, or being assigned tomorrow on the options and so on. Equities, futures, options, and futures all expiring tomorrow. So that's what we have. This morning, where we are is at the upper end of the range. So what's going on here? What is going on here? 1 second. Settle 39.13. Yeah, 39.13. Yeah, okay, so that's correct. We are right here. We're just below settlement. We're pushing up against this line right here. I'm paying close attention to the 3900, of course. Want to see what kind of a test we get from above. For the 3900. We did, hold that 2 days ago. We fought at it yesterday. There was a big ledge there, and finished above yesterday. We finished pretty strong yesterday, and this morning we're holding in this area. So as long as it stays the early LIS this morning, the line in the sand is this 3900. You can see here that the volume is distributed. This is your settlement price right here. The volume up top is distributed almost evenly across the board. Oh man, you're gonna make me do this, right? This smoking guy. Yep, there he is. Multi-distribution profile, and so this morning we're holding above the 3900 right in here. So there was a big ledge, and I think the prior point of control is at 3890. No, 3890 could be. Let me look for the prior point of control. Yes, 3890. We're looking at what does it do as it moves down into the 3900. Does it take a bounce? Is there a lot? Are there a lot of passive buyers there? This line here yesterday was brutal to trade against. Yesterday was very, very rough to trade around, because it looked like it was breaking as soon as it took out the 3900. Got the 3900 was fighting, and as soon as it took it out, there were spikes above there quite a few times, and then it would fall right back down. So this was just a widowmaker in terms of how it was trading yesterday until the break, until the afternoon, the strong afternoon break on news that the Swiss National Bank is stepping in. And then the market comes back and retests on the close, giving us a closing swing of in that 3900 area right in here. So 3901 or so, and that's where we're headed. So this is a clear line in the sand, and this guy is smoking a blunt right above the line in the sand here. And we want to see how we respond to it. Now, if we fall through, poke through, and come back in and just hold steady here, you really should be sitting on your hands. If it breaks through, however, and it comes back and it attempts to go higher, and then you have an impulse down from there, this starts to trigger a short, and now we're looking for just the next key levels, looking for 38.82 and moving towards the prior weekly low, and so on and so on and so forth. In either case, I'm going to say this, and I know this isn't a popular opinion here, I'm going to say that this is not a great day to trade. You're talking about a day before expiration. Roll week has traditionally been rough. For me, at least, I can only speak to myself and actually pretty much every trader I know. It's just very, very jerky. I posted an image yesterday in the Convergent Trading chat showing how there were a lot of sweeps coming across. Let me see if I can find a lot of sweeps coming across throughout the session, making it just completely undesirable to trade. Here's the image. This is what I posted yesterday. Just you could see that you're sitting here trying to, hold on to your trade, and you get these massive gaps. These are not data issues. This is the actual market using MBO data, and you're seeing a lot of this. This is unnerving for someone who's holding a position, but it is very common for expiration week, especially with the advent of weekly and daily options and stuff like that. It just becomes much more clear. Looks like the ECB has just released. Here's a move. Here's the ECB move right here. Let's take a look at it. Yeah, ECB looks like we spurted down a little bit. The market was expecting, looks like participants were expecting a little bit of relief. Didn't get it. Didn't get it. Pretty poor low. Pretty standard rotation here. New lows. We just pushed through the 3,900 right there. You can see some size going off at the 3,900 right in here and right here, and it's just holding steady here. Okay. There's the 3,900 I was just talking about. It is just battling it right now. So it's just this is an additional thing that throws a wrench in the works, and it's just happening here in real time. Normally this is done about it's normally done at 7:45 a.m. Eastern with a press conference at 8:30, and they moved it to 8:15. So this is kind of interesting. My plan for today is very simple. I'm going to be traveling later in the day. I don't need to burn a hole in my pocket before I travel. We did spurt downwards and through the area that I was talking about here, and we're recovering. You can see it's recovering above the 3,900. So 3,900 is going to remain the LIS, and it's probably going to be a messy area for the rest of the session. So I leave you with this. I don't have much more to say here. I'll leave you with this when it comes to the ES. It really is a good day to just kind of do something else today and tomorrow. It really is. You may have some news that causes a trend or something, but the market's stuck between this two-pronged profile right here. So this profile started on this drop day and encompasses this entire area. I was trying to see with this volume profile, I was trying to see where balance is, and you can see there's a double distribution profile here. And what this does is it basically says, okay, we've moved away from the upper distribution, we've cleared the low volume node, which is 3,900, the 3905, 3910, What's the other side of this? 38.90. So if it gets below 3900, 38.90 has quite a bit of volume in it, and it's very likely to kind of get tangled up there. So today is expected to be one of these kinds of days, up and down and up and down, a lot like yesterday. So I'm not going to trade it. It isn't worth it for me. I want to talk for a second about crude. Brutality, just absolute carnage there. Crude took out that 70 low, and I made a comment in Convergence chat room that having taken out the monthly low and then holding below it on this day here, this isn't going to bode well for anybody holding crude. OPEC Plus and these kinds of organizations are going to start hitting the news wires. You're likely to start hearing from OPEC Plus and so on that they're looking at constraining supply to support price. They like price in the $80 zone right here. 80 to 75 is the sweet spot, and guess what? That's where most of the volume has been, and now it's below value. Crude is below value, and it left a massive gap yesterday. Hold off on filling your tank, your gas tank. And it's really not recovering very well. So yesterday we didn't close, made some recovery. It actually pulled back to the 50%. It didn't recover to the open. The open was pretty much an open drive, and today we have a bit of an open drive in crude as well. It's the open and the high at the same spot, right at settle, and is pointing downwards. It looks unfinished on the downside in crude. Crude is really not doing so well. Again, the reopening trade, those people who bought commodities for the China reopening trade, there was a lot of push for that. The reopening trade is going to be huge. Every macro analyst was telling us about that, and a bunch of people took positions in that, and it's not looking so hot. So China is a lot slower. The reopening is a lot slower than people anticipated, and so the demand for crude is falling, in addition to the fact that Iran and Saudi Arabia are making amends, and the expectation is eventually Iran's supply is going to make it back online through some deal. But we'll see. Good luck, everyone. I know that's not very helpful to everybody in terms of having a plan for today, but please, it's triple witching Friday tomorrow. It's expiration week. Just don't give away your money for nothing. Come back on Monday, and it should be things should be more in sync. Good luck, and I'll catch you on Monday morning. No trader bite tomorrow, by the way. No trader bite tomorrow. I'll be traveling. Take care.